Welcome everyone to today's panel, Democratizing Access to Carbon Markets for Startups and Communities. We're very excited to have today's panel and appreciate your joining us in a busy week. We have a nice hour, and I thought maybe before we get started, we could start with some polls. Let me just start with first welcoming you and providing some context for today's panel. The reason why we're having this panel is part of a broader launch for an opportunity brief that went live today. That's inclusive and nature-based carbon markets to highlight pathways, a path to resilient livelihoods in sub-Saharan Africa. So I encourage you to access that brief, right, as part of today's conversation. And you'll also, I'll providing the link in today's chat. So you'll be able to access the link there. Okay. So the reason why we're launching this brief, it's part of the CFAR Alliance. You may have seen earlier this week the joint statement. The CFAR Alliance is a group of 12 organizations that are essentially trying to bring to the digital finance industry access to climate resilient solutions and charting a path to scale innovation ecosystems. And this has been an alliance that's been operative for the last year and a half. And we just announced this joint statement to highlight the work we're doing as a global platform for engagement and action. And so under this alliance, we have a Carbon Finance Working Group, and it's this group that's brought together the brief. Some of the members are on the panel today, so we're very excited to share the content, the insights from the brief through this panel discussion. I would like to see how that poll's coming through. Let's just see in terms of responses. So we'll give you a few more seconds. I think there's a bit of a delay, so you're still not seeing all the responses coming through. Okay. Great. So in the meantime, let me introduce our panelists by way of brief introductions from each member. Maybe we can start with you, Flor, to share a little bit about yourself and the work you're doing directly in carbon finance.
Yeah, definitely. Thank you so much, Jane, and happy to be here today. So I'm Flor Overbeke. I work as the Global Director for Regenerative Business at TechnoServe. And so TechnoServe uses business solutions to fight poverty. And we have been working for the past 50 years to improve livelihoods of local communities, of smallholder farmers and micro and small businesses. And earlier this year, we launched what we call Regenerate 30 with the goal to, by 2030, to reduce 30 million tons of CO2 and restore 30 million acres of land. And so we have been working very hard on developing different digital tools with satellite images, drone mapping, machine learning, etc., to really facilitate the pre-financing of carbon credits, as well as optimizing planting density for smallholder farmers, increasing success rate of tree planting, and leveraging kind of the carbon finance to unlock future carbon streams. And so I think over our work over the past decade and our research on carbon finance for smallholder farmers specifically and agribusinesses has really provided some interesting insights that I'm hoping to share with all of you today.
Great, thank you, Flor. Could we also hear from you, Nick?
Yep. Hi, Jane. Evening, and thank you for inviting me today to the panel. So I'm co-founder of a business called 4R Digital. We're a new company, and we are building a digital platform to allow smaller projects to access climate finance. And we're basing that on the fact that we now have some brilliant technology at our disposal to monitor activity at quite small micro levels anywhere in the world. Not just the GSM network, but many other forms of gathering information back from activities on the ground. We also have digital finance, which, that's my background. My background was M-Pesa, and then I co-founded a business called M-Copa, which is financing assets for people on lower incomes. And we know how to move money around now. So we've got digital finance, we have digital technology to remotely monitor activities. Yeah, and most importantly, I think we're starting to see a path to carbon markets, which is viable, with a hardening of demand. If you think about this as a two-sided platform, we've got lots of organizations stepping into the voluntary carbon market, setting themselves net zero goals. And we think we've got to find a way to join up those buyers of carbon credits to some of the smaller projects who are struggling to get access to that climate finance at the moment. And the platform we're building, it's early days, but we're doing it with the support of FSD Africa and FCDO and the Shell Foundation. And we're super excited to work with a bunch of partners on this. And I'll explain a little bit more about the project later. Thanks.
Thank you, Nick. And finally, Tim.
Hi, everybody. Thanks, Jane. Very excited to be here. My name is Tim. I'm managing partner at Mercy for Ventures. We are the venture capital fund arm of Mercy Corps, a global nonprofit. We invest usually at the pre-seed and seed stage in different venture solutions and startups that are confronting climate change, as well as helping build financial resilience. We have invested in about 45 companies to date out of our current fund, and we also engage pretty deeply with a variety of other types of partners and startups with a grant facility to test out the application of blockchain derivative technologies and carbon and climate tech to see if there can be a value proposition impact. And so that's the vehicle through which we've done quite a bit of work in the carbon markets and exploring new types of technology solutions, models, and services that can make ecosystem services, including carbon markets, work for small land stewards. So really excited to be here.
Great, thank you so much, Tim. I see the poll results coming through, and before I get there, maybe just highlighting that I would expect that many of us in our organizations are at the start of our climate journey, right? The discovery for strategy and what we do at large, seeing the urgency with which climate mitigation and adaptation are front and center of what we need to deal with. And so I wanted to just recognize that as we go into the polls and share some of the results. Also, I'll add through the chat the links to today's brief. So you have the short link to access the brief if you'd like to download that and read that later, as well as the website for the CFAR Alliance, the larger group through which we've organized this panel and publishing the brief. So great. In terms of the poll, I think I was just finding the responses pretty interesting. The first question was, I'm not sure, Abby, if this is something you're able to display or if attendees are just seeing it through the app directly. But for our panelists as well, in terms of the first question of if organizations have purchased carbon credits for climate sustainability strategy, a third of the respondents have said yes, a third have said no, and a third don't know. So we have a interesting mix across. And in terms of the second question, a majority of the organizations, 67%, haven't made purchases, but are looking to acquire carbon offsets. So just going back to the point of everyone being at the start or early in their climate journey, I think that's we're seeing that here. And then the third question seems pretty unanimous in terms of the most important aspect of carbon offsets, in terms of the climate, the impact that each organization is seeking as part of their climate strategy. 100% are saying it's for livelihoods. So welcome to this panel. That's what we hope to cover, and it'll be interesting to see how these markets can be inclusive, such that they're contributing to livelihoods impact. Okay, so the brief, just I think in terms of framing, focuses on increasing access to the VCM, so the voluntary carbon market, and that refers to, just for some context setting, the voluntary market where the public, right, corporates, individuals, NGOs, academia can buy and sell carbon credits. And so the brief focuses on that and how we can make it more inclusive for small land stewards. That means small scale projects, small project developers, smallholder farmers, and ultimately where they're able to access the economic incentives and benefits of carbon offsets. And in particular, we're focused on sub-Saharan Africa and the particular advantage, the competitive advantage it has based on its abundance of natural resources, right? So looking at nature-based solutions that can be accessed through the BCM. And finally, the brief is an opportunity brief, right? So focuses on 3 areas to highlight that we may draw the attention of funders, of donors and investors and innovators on where we see the points of entry. And so the 3 main areas that we want to cover today are innovative MRV, so measurement, reporting, and verification to expand and reach economies of scale. The other opportunity area is streamlining standards so that we can create a more accessible marketplace. And the third opportunity area is about increasing the supply of quality carbon credits. So today's discussion will cover those 3 areas. And I welcome you to drop questions into the swap interface and send us questions, and we'll try to answer those on the fly, or if not, towards the end. Wonderful. So in today's panel, we have 3 perspectives. Tim brings the investor perspective. Nick, you bring the seasoned entrepreneur and innovator perspective. And Flora, you bring the NGO working directly with smallholder farmers for livelihood impact. And I'm very excited to hear how you guys will view the challenges and opportunities. Let's start with you, Nick. Love to hear from you about what you think the constraints are to growing the BCM for small landholders.
Yeah, sure. I'll take a seasoned entrepreneur as a good compliment. Thank you, Jane. But I have been working in the digital space for the last 20 years, and I actually am an optimist. And I think we have some fantastic tools at our disposal that simply weren't there, a few years ago. And where the opportunity lies, in my view, that I'm sure we'll come back to this in our discussion, but at the moment, the markets, the carbon markets, the voluntary carbon markets especially, are a beautiful economic concept, but very hard to make work in practice, and especially hard when you're looking at smaller projects. Now, I'm going to give away my age a little bit, but in the 90s, I was working for BP, and we started trading carbon between our business units, following the old Kyoto cap and trade model. And the systems and processes we were using there have not really changed very much over the last couple of decades. It's still very analog. It's all over the counter trades. You're using auditors going out into the field. They're all doing a very important job of verifying that a ton of carbon being taken out of the atmosphere or displaced is actually happening. And that's been necessary to build those processes, but they're really not taking advantage of the digital technology that we've got on our hands today. And that's what we're doing at 4R Digital. We're saying we can find a way to use digital technology to bring many of the smaller projects into the marketplace. We can improve a couple of things. One, we can take costs out. So there's always costs to get carbon credits verified. We think we can take overhead costs out by using digital technology. The phrase MRV, monitoring, reporting, and verification, is commonly thrown out there, but actually it's more than that. It has to be about finding ways to open the door to allow people to come in, but there have to be quality standards. Of course, there must be. We need to move the auditing focus. Third-party verification is key, but we need to move that to a system rather than project by project and batch by batch. We think we can build systems that get audited against protocols. That takes out cost because you centralize the auditing work. And then, of course, we know how to use digital technology to move funds around between buyers and sellers. And we think we're building the CAVEX platform, Carbon Value Exchange platform, around a business model where we can get 90% of the proceeds back down to of sales of carbon credits back down to the projects. And that's way more than currently happens at the moment, where sometimes 40–50% of the proceeds from sales go out in the middle to all of these verification costs. So there is an opportunity, because the carbon market model is a beautiful economic thing, but we need to think about how to make that market work much more efficiently. And we've got the tools to be able to do that. And that, for me, presents a really interesting opportunity. Thanks, Jane.
Great, thank you, Nick. And it's exciting to hear that, you know, this is not something so far away, rather figuring out how to make the puzzles pieces work together and doing that much more efficiently. It sounds pretty practical and feasible. So Tim, on the back of that, we'd love to hear from you about what instruments and for pilots and investments you're making that are addressing some of the points that Nick has brought up around improving efficiencies, leveraging existing digital technologies, and maybe working at a scalable level, at the systems level. Great to hear how what theses are guiding your investments.
Yeah, absolutely. I'll paraphrase it a little bit, and I think Nick gave a great kind of characterization of you know, the pain points and then the opportunities that are presented in this space in terms of you know, cost efficiencies, direct market payments directly to communities and land stewards. And then certainly the brief will go into far more detail on all those things. But I think our exploration of ecosystem services broadly and carbon markets specifically stemmed out of, you know, 5 years and a portfolio of about 45 companies we've invested in that look at different layers, different ways of land use and land security. And part of that has been seeing that our companies that are, you know, helping food and ag players to map out their supply chains, better understand who their farmers are, better deliver types of inputs and replanting, are building resilience to their farmers. Other companies of ours are working on tenure security, allowing farmers to get formalization and security over their land, so they're more likely to invest in their land, access financial products, and so forth. But what we saw was kind of a hole, at least for us, in terms of what are the different models that can incentivize land use that's regenerative, both for the benefit of the individual land steward, the community, and then the region when you look at like a biodiversity perspective, and then simultaneously, if it's within a supply chain, the resilience of that supply chain. So over the last year, we've done really a deep dive in building out our thesis around nature-based solutions broadly, and what are the different types of technologies we're excited about that could make this tool, as Nick, you know, described it, this kind of wonderful currency we created out of the ether called a carbon credit. How could this be another kind of quiver in the tool belt to incentivize or reward economically those who are really on the front lines of applying regenerative practices, however they define that or whatever methodology we use. And so we've looked at a few different areas. I think, you know, again, in that stack, MRV, as Nick mentioned, is quite huge. I think the payments infrastructure, as Nick said, is already there. There's alternative ways we could look at it, but that's another area. Financing, as Flora mentioned, is a huge gap and issue. And so what we've been looking at is how do we use our different vehicles and instruments. We currently have 2 different vehicles. The first is an investment fund where we invest in equity, or in the case of kind of crypto and blockchain, in tokens or SATs, in particular companies or projects that are working in nature-based solutions and climate tech towards this end. And then we have a separate vehicle, which is a grant vehicle for piloting. And in that one, we're very keen to look at specific types of technologies that are as yet unproven, but could really move the bar for how nature-based solutions, again, can be financed, adopted, and incentivized at a small scale. So to give a few tangible examples, we were one of the first investors in Open Forest Protocol, which is a Web3-based digital measurement, reporting, and verification protocol, which essentially wants to be the infrastructure for how claims are made and validated about whether certain regenerative practices are followed by small landholders in agroforestry projects. We're very excited to be working with them. You know, they've just kicked off, but again, it's kind of an alternative way of how data flows and is reported and trust is generated that something has happened that, you know, people said would happen and that carbon's actually being sequestered in a tree or in the soil. The second is a pilot we're excited to announce that we're launching today with Forest Carbon. Forest Carbon is a blue chip, respected project developer out of Indonesia, working in a variety of different projects, but we're going to be exploring with them alternative registries that are Web3 based that would allow them to put their credits with a much deeper amount of data, metadata, that would showcase in true form all the co-benefits and more rigor all the different cross-validation work done by different auditors and verifiers that their credits are extremely high quality. So we're testing essentially a traditional project developer moving into alternative registries that allow them to showcase even deeper rigor than existing methodologies to see if that will satisfy the buy side that this is, a more premium type of credit. So happy to go into more detail, but those are the two areas that I'm happy to kind of share as examples today.
Terrific. And so maybe before we go on to Flora, I just wonder if any of the panels have reactions to the particular aspects of reducing the opportunity area of innovative MRV to reduce costs, right? To make it much more accessible, as well as streamlining standards to increase access to the marketplace, whether it's by reducing costs or increasing transparency, as some of the examples that you've mentioned, Scott. And I'm just wondering, is there an area or reactions from the panelists on which areas you find to be the most compelling or seem very exciting opportunities?
Yeah, I'm happy to chip in another thought, which triggered by what Tim was saying. So one of the problems in the market to date is buyers have been a little bit skeptical about the quality of the credits, and that that just brings us back to the importance of verification, and that and it's totally understandable to see why we've developed these very long analog processes for auditing and verifying. But I think we don't need to shelve any of that good work that's been done for the last 2 decades in this space. What we can do is use digital technology to enhance the quality or the confidence of the buyers in the quality of the credits, because we can give them direct visibility all the way back to the source of the data. And we can do that online now in a way that we couldn't do it 10 years ago or 5 years ago. And what I think, and it doesn't take away the need to get third-party auditors in, looking at protocols and how data are being managed. And I think we all have different views on whether we need to put that on chain and tokenize it or not, possibly. But actually, just good quality data engineering, I think, will take us big steps forward to be able to do this. And the really important thing, I'd love to get the other panelists' views on this, is if I can give a buyer that line of sight all the way down to the very projects that are generating the activity or sequestering the carbon or displacing it, then can we start to see real price discovery for those carbon credits, where, let's say I'm Thames Water and I'm coming in looking for credits, and I can see some water related credits and I can see the very data linked to the project activity. I might pay a little bit of a premium on the market price for those credits because they align with my mandates. And so I think not only can we improve accuracy, but we can build buyer confidence, and that might see us discover a few ways to add premium value on top of those carbon credits for those co-benefits that are occurring, or for alignment with particular investor mandates. So I think every way you look at it, the market needs to be digitalized effectively, but that helps us in many ways, not just cost reduction, Jane. I think it's also price discovery opportunities, and very clear, strong digital trails that prove a credit is a credit. Thanks.
Great. I want to come back to that topic of price discovery and quality. They are kind of two sides of the same coin. And but before we do that, maybe just pausing to reflect on how we increase that supply, and that supply coming from an inclusive approach, right? And so we're lucky to have Flora to be part of the conversation today, and just keeping in mind the themes from Financial Inclusion Week. I don't know if you've had a chance to look through some of the panels and also the illustrations, which are beautiful, by the way, but capture some of the themes and takeaways. And what I found striking was seeing the reoccurrence of economic opportunity, the connection of inclusion to resilience, whether digital or financial inclusion, and especially financial solutions for marginalized populations. So all those themes are relevant to today's discussion. And so it's important to hear from you, Flora, who's working on the ground and directly with smallholder farmers and the other populations, such as youth and women, on how you're approaching it, which is about livelihoods and inclusion. So I'd love to hear your experiences and how you see the carbon market opportunity for livelihoods.
Yeah, thank you so much for that question, Jane. And I think what is important if we want to make carbon markets work for smallholder farmers is that we really get a very deep understanding of kind of what smallholder farmers need, right? And I think probably most people on this panel and in the audience can agree that for smallholder farmers that have an average plot size of, let's say, around 1.5 acres, the value itself of carbon credits and the payout is not going to drastically improve their lives, right? It will be about, let's say, $5 per month in a very optimistic scenario. However, what I feel is very important is that over the lifespan of a project, the total amount can be, let's say, up to $2,000. And I think what is important to understand is how can we use that as collateral to attract more finance or to invest in future revenue sources that can actually provide long-term benefits for smallholder farmers. So I see that as a real opportunity for smallholder farmers on the ground. I think one other thing that is really important is, and that is specifically looking at nature-based solutions, there's a lot of co-benefits, right? For example, if you have agroforestry, it doesn't just help to sequester more carbon. It also increases biodiversity, it helps increase soil health, which then improves yields, food, livelihood security, etc. So that's something to keep in mind. However, I think it's very difficult to kind of quantify those co-benefits, and that is something that we probably need to get better at understanding. There have been some, let's say, when we look at certification requirements, there have been a lot of improvements. There have been some unintended consequences from kind of nature-based solutions and carbon projects, such as restricting traditional lands or livelihoods that have kind of negative impacts on smaller farmers. And I think more and more organizations like Vera and others have started adding conditions to their certification requirements that really help to avoid these unintended consequences for smallholder farmers. And that can also help in a sense to ensure that the outcomes of these projects are equitable. There's now even a W+ standard, and that really helps to support projects to include gender equity and women's economic empowerment. And just, I guess, as a final thing that I want to share on this particular topic is that much more research is needed. If we want to make this work, we very much need to understand the business case for smallholder farmers. We need to understand the short-term compensation in transitioning to regenerative, the incentives that are needed to do that, the long-term payouts, as well as kind of the time for the return on investment that it takes, as well as actually the safety nets that are needed and the risk sharing. So there's much more research needed to really deeply understand it, to be able to really make this work for smallholder farmers. Thank you.
Great, thank you, Flora. So many exciting threads to pull together. I don't know where to start. I had a plan, but now I kind of want to move around. Okay, so sure.
I'd love to add a little to what Flora saying, because this point about $5 a month to a smallholder farmer, it's a really good one. Nobody's going to jump into the carbon markets to either deploy a project or make a bit of equipment or do something for the carbon revenue alone. But that £5 or $5 as income on a monthly basis to a smallholder farmer is actually pretty material. And this is back to the beautiful economic theory of carbon markets. If I'm here in the UK and I want to offset my monthly emissions and it's roughly going to cost me £5 a month, I would do that because one, it's going to make me feel better. It's going to drive my thinking and behavior at my household level. £5 a month to me is relatively easy to afford. $5 a month landing in the pocket of a smallholder farmer is potentially much more material than the £5 a month is to me. And this is an opportunity. I think we can start if we've got net zero commitments being made either at a household, a small business, or a large corporation level in the developed economies. Let's find ways to help move that money across, because a ton of carbon anywhere in the world is a ton of carbon. Let's find ways to get most of those proceeds from carbon sales down in hard currency to these emerging economies. And I think there's an opportunity in here when we think about, the dollar value of a ton of carbon being sequestered in the north and moved to the south. It's you actually, for once, it is a global commodity, but the value of that commodity means different things to different people. And I think, Flor, your point's a really good one. $5 a month might not seem very much, but actually it can be material to a household's income in many emerging economies, not just sub-Saharan Africa.
Yeah, no, if I could just add in really quick. Yeah, Flor hit on, I think, just a bunch of great points. I mean, I think number one, the science is always evolving, and the research needed to prove that the underlying ecosystem service that is being done and whatever credit is creating for it, whether it's carbon or other things or other types of co-benefits, that's all evolving. And it's going to get hopefully better and more rigorous. New methodologies will come out that are more inclusive and fair, and hopefully led more by indigenous communities and the practices they've already been implementing. So I think that's like an important thing to highlight and notice, and just to kind of showcase that it's we're still, I think we're still in the process of figuring out what level of rigor makes sense for the economic need from the buy side, in terms of like understanding what has been sequestered or what has been done. And then second, fully, like, I think anything when we look at smallholder farmers in engagement, whether it's carbon markets or anything else, I think it has to be bundled, or it has to be embedded. There's just simply not any individual service, whether it's insurance or credit or inputs or market access, generally on its own doesn't really push the bar enough in order to get mass adoption or make the economics make sense for the parties. And so I think the way we've approached where carbon markets fit within this is, how is that embedded within other service offerings or other distribution channels, be it insurance, be it with vertically integrated ag companies? How is this essentially another tool that whoever holds the farmer relationship as a customer or stakeholder or partner can add in? And that might be a nudge, that might be great extra income, that might subsidize replanting, but it's kind of a small piece of a much more challenging puzzle around how smallholder farmers essentially make profitable businesses out of what they do, but also become more resilient to climate change at the same time, which is a really tricky challenge.
Great, Tim. I think you bring up some really interesting points, and just wanted to reflect on a couple of them. In terms of the livelihoods opportunity, when we were starting the brief, our hypothesis was that it's just really a function of price increasing and being able to just increase access by awareness, and thinking that the economic incentive was going to be big enough in order to direct changes in practices and for smallholder farmers. And I think what we realized was that, oh, wait, the economics of how this works actually is not straightforward, right? There's in the traditional model, there are buyers and sellers, there's intermediates in between, and the work of creating carbon credits and qualifying them has its inherent cost, right? And so today, anywhere from 5% to maybe 40% of that will go back to the beneficiary, right? So that $5 a month you're referring to, Flor, and just not economically large an incentive, certainly not a clear income stream. Perhaps it could be supplementary, and so it behooves us to look at how the carbon credit income or revenue can either be part of a larger strategy where you, for example, you were mentioning collateral for investments or future revenue streams, or looking at it through the lens of co-benefits. These are all points that we cover in the brief, and I think it's an important one because that's the situation now, right? With today's prices and with the way technology costs and works today. That's not to say as the ecosystem evolves and there are more players or improved efficiencies and the price also increases as a result of demand and meeting that demand, the market setting much better prices, then we should continue to evaluate this as an income strategy. But let's not underestimate the co-benefits and certainly the benefit to the community, right, versus just individuals. And thinking about the many dimensions of the livelihood opportunity. So I just wanted to flag that because it's an important piece, I think, for funders to think about in terms of pathways and an analysis that we include as a result of the brief. So maybe we turn our attention to going back to this point about price discovery and quality. That's something I wanted to double click on because it is a very timely and relevant tension, right, that we're dealing with. There's the perception in the marketplace that certain types of credits are better than others, and those are tied to the quality and therefore the price that it commands in the marketplace. And I'd love to hear from you guys on how we might increase the supply of quality credits with the tools that we have today.
Do you want to pick one of us, Jane, or do you want?
Oh, sorry. I was yes. Who would ever like to respond?
Yeah, I'm happy to start. And yeah, we are seeing a big range. We're seeing $2-3 a ton. In fact, we sold them copers. We went through the gold standard process and sold ours at $2 to Microsoft. But it bumped along. The price bumped along for a long time at quite a low level. But we are now starting to see different prices for different types of credit, effectively. It's still, of course, there's displacement credits, there's sequestration, which is removal or sinking. You've got fuel switching. There's a few different types. And I think over time, we will start to see some credits attract higher prices than others. But there's already some evidence out there that the smaller projects with very clearly articulated co-benefits do attract higher prices. And that's something I think we'll see more of. And it does come back to me, back to this point of, let's find ways to give opportunities for projects, smaller projects especially, to show what a real impact they're having on the ground, and how we quantify those co-benefits. Yeah, that's a little bit like the search for the Holy Grail, isn't it? We've been, for decades, we're trying to think about how do we quantify, biodiversity impact, and how do you really quantify livelihoods properly. And there are ways. We're getting better at it. I think, Floor, you mentioned W+. This is a good methodology. Others are starting to emerge. And if we can build those quantification of benefits in alongside real evidence that the carbon has been sequestered or taken out or displaced, then I think we will start to see higher prices. Some of the pundits out there are saying prices could be, well, depending on whose report you want to read, but BNEF, they look forward down, partly drawing on some of the compliance or mandatory markets, but they're saying $30, $40, $50 a ton is not crazy. Again, who knows? It's supply and demand. One thing has happened. We've got more and more people committing to net zero at an organizational level. We've had some of the ambiguity around trading cleared up at COP26. Hopefully we'll see more of that around things like Article 6 in the legislation. I think we'll see a merging of voluntary and compliance markets. These are all good signs that the market is going to happen. It's going to mature, and we know demand is there. I mean, back to the point of this panel, we've just got to find ways to bring the supply side in for the smaller projects, and that for me is the opportunity in front of us. Digital technology can help us pave the way for these smaller projects to come in, perhaps on an aggregated level, demonstration of these co-benefits. But I think that this is a brilliant opportunity to use digital tech to make a difference and to bring real income back down to those projects. But yeah, we'll see. I think we'll see a range of pricing. The other interesting thing about these net zero targets that are being set, I'd love to get the other panelists' views, is many of them are being set for net zero by 2035, 2040. We've been talking to some of our project partners on CAVEX. How do you cope with that now? If you're a finance director in an organization and you're looking at these carbon markets, you're thinking, hang on, the price is probably going to go up. What can I do about buying those credits now, locking in at a certain price? And we get right into options and future pricing. And that's a really interesting angle. But again, you need the market mechanisms to work to allow those sorts of things to occur. And I also like, back to Tim's point, I also like this idea about it doesn't have to come back as cash. Why can't we, if a credit is being generated and bought by somebody and retired, hopefully retired against a target, which is what we should be doing, not just holding them to resell them back into the market. That's what the market's for, retiring them against targets. If you can retire against target, you don't need to necessarily move cash. You could give credit in kind. You could create, agri input credit, etc., that drives livelihoods a little bit further. So there's lots of nuances in the opportunity. So I think we're going to see a lot more activity over the next couple of years that sort of test out some of the ways we can make the market work efficiently for these smaller projects.
Terrific. I love the thought of actually not paying back in cash, rather in other forms of assets or resources. I'm not sure. Oh, Tim, you wanted to respond, and then I'll take this question that came in as well.
Yeah, no, I mean, agree with everything Nick said. I think that one component we've been doing a deep dive on, and there's far smarter people than I who've spent time on Wall Street who will describe this much more accurately than I, but I'll do my best shot. Price discovery right now is frankly a mess. It's over the counter. If you're a premium project developer, you can get on the phone with any buyer in the world right now and negotiate pretty preferential terms. But for the other 90% of the market, particularly smaller projects, and particularly any projects that are not necessarily the highest standards or what the market is looking for around Vera Gold standard, you're going through multiple layers of brokers, and the margins are very thin and complicated, and there's really non-existent financing. So I think fundamentally on the buy side, there's not yet a clear and amalgamated financing structure for this. We need massive scale from a mitigation perspective now. We need different types of financing mechanisms and frankly forward contracts that are looking at nature-based solutions, but also looking at like enhanced rock weathering and a variety of other types of mitigation opportunities. But it is somewhat of a tragedy of the commons in that at the moment, there are not really yield curves for carbon assets. They all have different types of potential scientific yield in terms of like the carbon they're pulling out of the air. It's very hard to price. It's hard to lock in the price. Again, it's all over the counter. It's almost impossible for project developers to raise money, or there's not really transparent and market set terms, or they're always in flux. And then fundamentally, carbon credits or assets are not really fungible over time. You can purchase forward contracts for different vintages, but essentially what we really need to create, and again, this is more of on the financing side, are forward contracts that would allow, a major corporation, say, to lock in their purchases across a variety of different types of carbon access over, say, a 20-year period, and then hedge against the price between those assets. So essentially what that would allow them to do is to say, I'm going to purchase a bunch of vintages of enhanced rock weathering today at $500 a ton, knowing that that should hopefully go down to $100 a ton when that gets to scale, and then cross-reference that price and hedge against it with nature-based solutions, which I will buy now cheaply, but the later vintages will be quite expensive. And that would essentially float all those assets boats and allow big money to kind of come into this. How that reaches smaller developers is another question, and there's different ways of different technologies and groups that kind of aggregate smaller projects that might be sub-economic or distributed and so forth. But I think that financing side right now needs a lot of innovation. Otherwise, we're going to continue kind of one-off projects and just not really seeing the type of money that needs to come in as soon as possible to actually like stimulate the supply side.
Yeah, 100% agree. Yeah.
Jen, if I may just very quickly add to, and I'm definitely not a carbon accountant or an expert on pricing, but I think what Tim and Nick were saying is very, very interesting. And so what I've been hearing is that some organizations, specifically for removal solutions, they are now willing to pay $100 or even up to $1,000 for a credit in light of kind of their integrity. And so there are two types of removal credits, right? One is looking at kind of carbon sink, so increasing the uptake by trees, soil, etc. And then you have the part that looks at more of the chemical processes, so the capture of CO2 directly from the air. And I think what's just the only thing I wanted to say is that a word of caution, I guess, because there's now going literally billions into carbon capture technologies. And the IPCC scientists argue that, relying on these unproven technologies with uncertain kind of social and environmental impacts really also can distract from the real focus of eliminating the source of emissions and phasing out fossil fuels. So that's just something I wanted to add to the discussion.
Right.
Yes, Flor, I think you're right. We shouldn't lose sight of if the world is going to deal with the climate change challenge, we have to reduce the amount of CO2 going up into the atmosphere. We have to take it out. I mean, there are, I know we've had a brief discussion beforehand. There are these other sources of carbon credits around things like displacement. And for me, they play a role, but because what you can do, let's think of an example. I'm a smallholder farmer. I can either buy a petrol pump, water pump to help my irrigation on my farm, or I could go for a solar one. The solar one's more expensive, but if we could nudge the price down of the solar irrigation pump by allowing a small carbon revenue stream to come to the pump, then I might make the right decision to go for solar rather than petrol. So I think in that situation, especially again back to helping people on the ground make the right decisions with an additional source of revenue, I think displacement credits have a role, but ultimately it is going to be about reducing at source, not putting as much in the atmosphere, and doing whatever we can to get it out of the atmosphere, which some of the sinks or the sequestration technologies. And I think we might start to see pricing differentiate around those different types of credits. But I wouldn't discount the displacement one personally myself, because it can make a contribution to the right economic development path being taken, i.e. cleaner energy rather than hydrocarbon energy. But I think I think you're right. Ultimately, it's about less CO2 up and more coming out of the atmosphere.
Yeah, and just one last comment on this. I think I'm borrowing this from Gregory Landua at Regen Network, but I think biodiversity is incredibly complex. Climate change is the definition of systems change, and so I think when we look at like how do we hold what must happen amongst 1,000 different types of actors, from government down to an individual land steward figuring out what to do with their land, to entrepreneurs, investors, all these folks. We have to hold that it's complex. There's no silver bullet. We can't pretend there's a silver bullet. We need pretty much everybody doing everything they possibly can now with some level of rigor and some level of also humility. And to some degree in coordination. And so there's this like minimum viable complexity to everything that we're doing that will hopefully achieve an end towards both mitigation and adaptation. And I think, again, for all of this, science really has to underpin it, whether it's, the billions of dollars going to carbon removal, is it really actually doing anything? It's a huge hot debate, somewhat skeptical on it, and frustrated by the amount of money going to it. But nature-based solutions alone aren't going to solve this, even though that's something we're very, passionate about. We just really need that kind of cluster of different actors doing what they can in tandem and collaboration, and what are the incentives that allow us to do so, that I think is going to really move the bar.
Right. I want to make sure we answer a question that came in. So let me address that first, which was, could MRV also empower local communities to earn revenue by being able to carry out the MRV in a peer-to-peer system rather than having a professional carry that out? I'll also just throw that into the chat if needed.
I'm happy to have a crack at it, because I do, at the end of the day, it is science. So whatever activity you're trying to measure that results in the carbon credit, that should all be based on science. And if you can prove that you're monitoring that activity, you can prove the calculation of the credit has been done properly, then I think you could see peer-to-peer stuff happening. But this is back to the model we've got at the moment, is over the counter. It's been mentioned a few times, brokers involved, auditors involved, VVBs involved, standards involved. And we've sort of gone that way for good reason, because we're trying to sort of give confidence that credits are credits. But if we trust in technology and we trust in science, it's at the bottom of everything is the science. then you can capture it in digital data once it's there, and you can prove that it's, and this is a good use case for a distributed model. You can prove that that carbon credit's been created and has ownership. Then you can quickly move towards more peer-to-peer type things. But that does feel a little bit of a way out at the moment. I think we've got so many fundamental things to fix in the markets first. But ultimately, peer-to-peer stuff could start to play a role.
One additional add, I'd be curious for your perspectives. I think that I agree. I think what Nick said, that is blockchain necessary, maybe not, but I think one of the features that it does offer is for that very seamless cross-validation of data from different sources. And I think this is one that's quite intriguing in that right now, this is the way the systems works. If you purchase a carbon credit, looking at how the data is produced and validated and audited is just catastrophic and a mess. It's hundreds of pages of PDFs, Excel spreadsheets with data that can be manipulated. Everybody agrees this system needs to be updated. And this is where I think that, what Regen Network and what others are doing in terms of, here's the infrastructure, and a variety of different actors can provide their data and allowing others to essentially audit that protocol of how the data has been provided and cross-validating it. So self-reported is obviously critically important, and any varied evaluation methodology involves community engagement, which is going to be surveying and so forth, whether that's people themselves, self-reported, or a third party providing a survey. But at the same time, there's all sorts of alternative ways to monitor whether trees have been cut down or growing through remote sensing. And so I think that where we will be moving towards is looking at the quality of data coming in, the kind of like rigor of cross-validation, and then allowing to assign scores to it or visualization that can kind of give a buyer a sense of, well, on this piece, it's only self-reported, but that doesn't mean it's a bad credit. It just might be this component or co-benefit is only coming from a self-reported source, and it's not economically viable to cross-validate it, and that's okay. So I think we're moving towards more of a standard or lexicon that will recognize that and allow whoever's buying in a more sophisticated way to see the quality of the data that's been going into it.
Yeah.
Sorry. Go ahead.
No, maybe to add to that, we've been kind of looking at different applications that can be used at the farmer level, so that farmers can use themselves to kind of look at the carbon credits, etc. And so there's different applications, etc. And I won't name names, but some of the studies that have been conducted and they're actually quite interesting, is that once you kind of ground truth that, it can be off by like double the amount, right? So it's only actually an action, let's say using organic fertilizers, is only going to reduce carbon emissions by, I don't know, let's say a number, but actually the tool will report that it's double that amount. So it's very much, there's not one tool in the market now that can actually very accurately estimate what different practices, what the effects on the farms will have on carbon emissions. And some of the tools, even the direction was wrong, right? The direction of kind of the carbon development was completely off. So to say that it's like double the amount, I think it's going to be difficult, especially since we don't have, and especially I think if you look at it and kind of big farms in North America, whichever, it might be possible. For smallholder farmers in sub-Saharan Africa, I think it's much more difficult, also because we don't have kind of the tier 2 data that is needed on the national and local level to kind of ground truth these calculations and estimations.
I think that's interesting. I imagine Nick is begging to differ, because you started the conversation with this perspective about auditing the system and the protocol, and that maybe the way the CAVEX platform is approaching it is that there is that ability to go granular and bring therefore the credibility and quality. I think I wanted to add to this point is that to the person who asked the question, is that the idea of trying to enable local communities and do the reporting as such, it's something we did explore in terms of the brief and aspects of how you might aggregate the smallholder farmer in terms of the profits they produce. And I think there's the element of like the actual implementation and the challenges that Flora has highlighted. Counteract that with maybe the innovation that Nick is operating in. But I think there's also just the world of carbon credits and quality discussion we had before, is that we're constrained by how quality is defined. And so things like permanence or additionality, this aspect of containment is very hard to do when you're talking about small land plots, and you're also talking about trying to aggregate them under distinct geographies, right? And so there is that actual physical challenge of trying to work on the community level. That's not to say it's not an opportunity, but I just wanted to highlight that aspect. We have 5 minutes. I just got a reminder. So what I wanted to ask was to the panelists, how might we encourage catalytic funders and innovators in terms of how they could treat carbon as a potential revenue or kind of additional resource that would spur the adoption of carbon credits and creating all those credits in their businesses, right, and their supply chains. How can we help them approach this opportunity, as we know many of us are in this exploration journey?
I'm happy to go first on this one, Jane.
Right.
And so from my perspective, founders and organizations that are launching projects specifically with smallholder farmers should bear in mind my top 3 design principles for success, right? I think the first one, which is very important, is that we need to treat smallholder farmers, smallholders as farmers and not carbon farmers. The word carbon farmers has been used a lot, and I'm slightly allergic to it. I think that the economic value of carbon credits under most scenarios is likely to be relatively small compared to farm incomes, right? And therefore, the opportunity for most farmers is likely to be in building the long-term productive capacity of their farms in the face of climate change. And so projects should really focus on identifying the opportunities for carbon finance to meet adaptation needs, instead of identifying kind of the carbon mitigation opportunities and finding ways to bolt them onto existing farming practices. So I think we should really be aware that meaningful and sustained smallholder impact is really more likely to be generated through co-benefits than as like the carbon cash payments. And then another thing is that we need to really look at building incentives for today as well as for tomorrow. So smallholder agroforestry projects, they really must progressively layer on the smallholder incentives to maximize the chances of the project's durability, right? So these include the upfront financial incentives, as well as the short-term crop harvest, the collection of wood waste, for example, and kind of the longer-term fruit or timber harvest. And if we don't do that, the farmers will always prioritize alternative land use options that really will lead them to those faster returns. And then just one final point, sorry, to finalize, is that we need to build transparent and equitable partnerships. There's a lot of kind of information and power asymmetries between smallholder farmers and stakeholders. And so projects really must ensure that farmers, intermediaries, but also the finance providers, they receive an equitable share of the carbon revenue, and that's proportionate actually to the value that they provide in sequestering the carbon and ensuring the durability. So yeah, thank you.
Terrific, thank you. We have a couple of minutes left, so maybe just quick responses from you and Nick and Tim.
Yeah, sure, happy to go first. So, well, Flora, I agree with everything you're saying. I'm sometimes accused of, and I know I'm guilty of it, of oversimplifying things, because this is actually really complex. I mean, the science is changing all the time. Our understanding of carbon is in the real world is changing all the time. Technology is changing. These things are all moving pieces, but I'm also a big believer in the power of demonstration. So we are building CABEX. We'll show what digital technology can do, and we'll pick a few use cases and demonstrate it. And I think by showing how we can bring technology together, join buyers up with suppliers, and prove that we can do things in a much more efficient way, take out costs, get more money back to the projects, that's what it boils down to. I think if we can show it 1 or 2 times, I think we'll gather a little bit of momentum about making the carbon markets that much more efficient, especially for smaller projects and smaller participants on the supply side. So, if we overthink it, it'll never happen. So if you think about it as a bit of a jigsaw, we know how to move money around in small amounts. We know how to monitor remote activity down to quite small levels. We do need to discover all of this complexity and try and work out how to bring lower verification costs into the mix. But I think we can do it. And so, yeah, we're big believers in power of demonstration. With the support we've had from FSD and FCDO, we'll get a platform out for people to see. We've started demoing it already. And I think we'll show that there is a way through this complexity that is beneficial to all participants in these carbon markets.
Perfect.
Yeah, no.
We get cut off, Tim. I just want to mention we may get cut off, but please, I'd love to hear from you.
Yeah, I'll be super quick. Plus one, everything that's already been said. I think that, for any entrepreneurs thinking about engaging in this space, there's, essentially 25 plus years of history since I think COP9, if I'm not mistaken, and looking at this space. Yeah. COP8, sorry, almost there. And there's a variety of different players. I think the brief kind of describes this out, but I'm kind of a believer in that. It's going to be like pathological partnerships and collaboration that allow this to reach smallholders, maybe in an embedded way or a modular way. A lot of entrepreneurs are building things and have relationships with farmers or have products that could solve some of the data gaps, what have you, right? So I think that there's a lot of ways to look how we might play in this ecosystem to make the price lower and so forth. And then the last is maybe a more pessimistic take. I mean, the time is really now. We need to get 350 million hectares of projects online, projects broadly, over the coming 10 years to hit our goal of 1.5 degrees Celsius. Last year, we brought 8 million online and we lost 20 million in deforestation. So we're driving reverse. So the time is now, not tomorrow. We need to drive more finance. We need to do it in an inclusive way, an equitable way. And my concern is that, and this gets what Flora says, is this new tool that is gaining traction is creating new economic pressure on land. And those who have the information to take advantage of that are already purchasing large tracts of land. And so we may be replicating some of the greatest inequalities in land distribution or exacerbating it in this moment. So it's really the time to dig in and see what you can do in the space.
Great. Some great points here to wrap us up. Thank you for joining the panel. You could always visit the link I've added in the chat, where we lay out 7 specific recommendations, many of which we touched today through the panelists. So I just want to thank Financial Inclusion Week organizers for having us, and for our panelists for a really energetic and helpful conversation. So thank you for joining us today, and please do go visit the link for the brief. Thanks, everyone.